Good afternoon, everyone, and welcome to today's Facebook Live here in the Marketing and Lead Generation for Mortgage Brokers group. My name is David Miles, and my mission is to help mortgage brokers and financial advisors like you to generate your own predictable flow of leads from your own websites so that you don't have to buy them from lead generation companies or stress about where your next client is coming from. I'm joined today by a special guest. His name is Matthew McAllister, and he's from a company called Mortgage Propeller. We're going to be talking probably about all sorts of things, but ostensibly we're going to be talking about fintech, what fintech is and how it's going to impact your businesses and the mortgage industry at large over the coming years. So Matt, welcome to the group. Great to have you with us.
Hi David, it's great to be here, and thanks for having us in the group, and to all the brokers there listening or watching. It's great to to be finally talking to the right people.
Excellent. Now I have to kick off with this. I've seen a few things written about you, Matt, that say but directly or indirectly, one of the ways you got into the mortgage industry was because you ended up buying a house on a credit card. So I'm going to have to start by asking about that before we get into the whole fintech thing. What's all that about?
Yeah, everybody likes that, and that is how all of this started. So you have to go all the way back to 2008. So we had the credit crunch, and the world just fell apart, if some of you may remember. And I was for a living, I was a derivatives trader, like one of the guys in the stripy jackets, although we all did it at computers. And Northern Ireland's house prices, which had gone up absolutely insane through the noughties, it collapsed and just kept collapsing. And you know, as someone who looks at asset classes and trades, I thought, like, well, how low can a house go? It has to be worth something. And I actually had lost a lot of money around that time as well. So I didn't have any money, but house prices just kept falling apart. But what I did have was a large credit card promotional offers. So I started to Google to find out, okay, what does a house go for and what's it worth? And then there was online houses in Northern Ireland, they were practically giving it away in auction. So I was like, okay, I'll buy this house with the credit cards. You know, I'll do a money transfer across, buy.
Oh, because this in my days, I remember this. Credit, you used to have checkbooks with the credit card, didn't you? You'd have credit card checks. You could write a check and it would go straight on your credit card.
Pretty much that. And I had a few of them. I can't remember the time. And I was like, okay, I can afford to buy the house. The house was on at an auction at £32,000. It looked brand new. It was brand new. It was one of those brand new builds. And you know, unfortunately, the builder, whoever went under. So I was like, okay, I'll buy this and then I'll get a mortgage. So I bought the house. It was £42,000. And then I went to get the mortgage after, and then that's when I got a rude awakening that, okay, if you max out your credit card, and also if there's no products available because of the credit crunch, you might be in a little bit of difficulty. And I was in a lot of difficulty. And fast forward 18 months, the promotional offer had ended, and I still hadn't got a mortgage. And I had went through every broker, every lender, my own bank, and I could not get out of it. And then slowly but surely, I managed to squeeze out after paying massive interest. It nearly ruined me. But what I did see was the process at that time was absolutely atrocious. Probably thinking back, a lot of us to do what was happening in the world at the time. But I got the mortgage, and I worked out. I was like, okay, there's things you don't do with a credit card. I've learned that. I actually did it a few more times, which I haven't told people about. I did it 7 more times, because Northern Ireland, probably when I studied it, was one of the fastest house prices crashes in history. So there was a massive supply and nobody was buying them. So what I would do was use the credit cards to front it, fix them up, and then I would remortgage and do it that way. But what led to Mortgage Propeller was that me and my wife went for a mortgage, now in a bit more civilized way, a couple of years later, and it was the same process. And at the time I was working in Fintech, and I couldn't believe that it's the same, chasing after an advisor, trying to get paperwork, signing, GDPR, things like that. This just cannot be the way. I see all this innovation that's happening, and that's what sort of set me on a journey. But it all started with the credit card. Had I been able to get that mortgage very easily, we wouldn't be talking here today. Or if I hadn't been stupid enough to use the credit card in the first place, we wouldn't have been talking here today. But look, things happen for a reason.
Yeah, exactly. There's something good falls out of all these things eventually, doesn't it?
Didn't seem like that at the time.
Well, no, it sometimes takes a while to see it. But Ian in the chat said he used to live in Belfast. Wish he'd bought back then. It was 2002. So yeah, well, see, you should have got your credit card out, Ian. So, so you mentioned fintech and the fact you're working in fintech. I suppose we should deal with the obvious question first of all, because some people watching this might have heard the word but not been quite sure what it is. What is fintech?
Fintech is some phrase that some smart ass in Financial Times or somewhere decided to put up there, and now it seems they throw tech at the end of everything. Prop tech, what's the other one, legal tech and all this stuff. It's just they're using technology in the finance space. It's nothing fancy. It sounds good. It sounds good to somebody who's anything, but it's really nonsense. I was talking to a professor in Queen's University here in Belfast, and he asked me the same question, and he just nodded. I was like, yeah, that's what I tell my students. So it's just a term. And there's things happening in the fintech world and have been going on for the last 10 years that are disrupting it in payments, particularly. There was the PSD2, which led to open banking. There's things going on there, just starting to enter the mortgage space. And then, of course, with the pandemic, people are taking a closer look. But you go and have a look at America and what's happening in the mortgage space around fintech. And, there's been things happening there for quite a while. It's just a phrase. Doesn't have to be anything fancier than that, I said when I was talking to that professor, Henry Ford, who came up with the assembly line to make the cost of cars cheaper. In his day, that probably would have been called car tech. Do you know what I mean? It's not. It's just a phrase.
Yeah. So I suppose really it goes back at least as far, I guess, as when the back system was invented, it just didn't have a fancy name back then.
Yeah, maybe.
So obviously, as someone relatively new then to the mortgage industry, and by the sound of it, you sort of got involved with it because you thought here is an industry that needs fixing in some way or has potential to be improved. What do you make? I mean, how long have you been in the mortgage industry? Is it about 18 months?
I started looking at this. So it was 2018 that I watched my wife get upset because we kept being asked for one more thing and one more document and try and get over the line. And I was like, this just has to be a better way. So I just started looking around that time, and I immediately went to America to see what they're doing. So I typed down mortgage online. There must be a way of doing this online. It just has to be America. Will have a way of doing it, or an app or something. There's whole loads of things going on over there that they're not even being suggested over here. And I looked at Australia. Australia didn't get as hurt as bad in the credit crunch, and I knew that because I was working in a fintech company at the time, and we were pitching to some of the banks then, and they didn't get hurt. They didn't get squeezed in the credit crunch. They had their own capitals and weren't under as much pressure. So that sort of led me looking around, and I seen things happening in Australia. If anybody's bored in the mortgage industry, have a look to see what's happening over there. There's a company called Joust. It's a startup, hasn't really done much, but it's a very innovative idea. There's another one called Loan Dolphin. They just merged together. There's a very strong one called Hash Ching that's been going for about 8 or 9 years. And I started looking, I was like, that's fine. I went on to the biggest mortgage intermediary, I suppose. They're also a lender as well, but in America, it's Quicken Loans. And they created a company called Rocket Mortgage in 2016. And now is by far the largest arranger of mortgages, doing 110 billion a year. I went on to their site in 2018, and I went on. I did their online fact find, and it was just a thing of beauty. When you're in the tech world, or if you're in product design, it's all about user experience. And here I went and did this, and it was just poetry.
What sort of thing were they doing differently then? Because obviously, online fact finds were happening here at that time, but what were they doing there that was slicker?
It was everything. Like when you think back to the first time you ever opened an iPod or the iPhone, and you get it, and you open the box, and there's something about how it's packaged and how it's done. Well, that's what it was like when you went on there. Yeah, I've seen the online fact finds here, and they're all terrible, pretty much. Some of the digital competitors are pretty good, but theirs was you just went, this is how it's going to end up. And then you started to think about open banking, which you knew was coming in around that time. I think it was September 2017 or something, 2018. You're like, if they've got an online way of doing this for the borrower, what happens when the borrowers are able to go and pull in their bank statements automatically and pull in their credit files with APIs and the identity verification? Okay, you could see how a lot of I didn't know this at the time, I know it now, you could see how a lot of the pain that the broker has to go through could be greatly reduced. And that was the start of it. So you see what was happening over in America and Australia. And so 2018 is when I started looking. 2019, I tested something in the Irish market, and it was a bit of a car crash. And that was it. But then a few random introductions led me into my co-founder, Paul Dalsell here, who has a firm with about 100 advisors underneath him in different formats, and he started to correct me in all my because I'm coming new and I'm still asking silly questions that don't make sense because I'm not in the industry, and I'm like, why can't you do it like that, and why can't you? He's like, no. He says, look, the brokers are kings. They provide a personal service that's unmatched. They have all the clients, but it's the stuff behind the scenes that makes the legacy software, the difficulty in lead generation, which is where the likes of yourself comes in. He says that's the real problem. If that ever got away, the brokers will be able to do so much more business, and the better brokers would rise to the top, and a better quality of service would be given. So I suppose 2018 is when I started coming into it. 2020 January is when the company was incorporated. January 21 is when we launched our pilot. And so I suppose I'm at it now about 3.5 years in some form or another.
So I mean, it's interesting, but obviously one of the advantages of being new is, I suppose, you see things differently and you ask questions like that. And I suppose one or two things happen. Either people, someone says, "Oh no, that's just a stupid question because you're the new boy, you don't understand it." But I guess that, for every 10 questions like that you ask, there's probably 1 in 10 where you ask something and everyone goes, "Oh, well, actually, I'm not sure why we do it like that. We just always have done." And sometimes it takes someone with a fresh pair of eyes from outside to uncover the thing that actually there isn't a good reason for it. It's just become habit or whatever.
That happens a lot. So we ended up getting investment from the industry. So we're probably about $500,000 now, and they're mostly from industry investors. So advisors and people that have got their own mortgage firms and people on the periphery of the mortgage industry. And so I've got great access to them, and I'd be like, "Well, why did that happen? Why did that happen?" And that happens a lot. Brendan, who's the CTO, he's coming from a completely different background. I came from just before we did mortgage, but I was in a Betfair, the online gaming world, a gambling company. So I was in there, and I was rest of world commercial manager. So basically, all online engagement and things like that. And there's things you would see there. It's very similar because, some of your listeners here might know about the issues that happen with Google Ads there and the financial promotions, you have to be verified. It's the same in the gambling world. Because I was rest of the world, if there's no gambling license in, say, Brazil, Google Ads won't let you do ads. So how do you generate your leads there? There's a whole different strategy around that, which is not done in the mortgage world, even though you've got these monstrous players like the Mortgage Advice Bureau, Primus, and I'm going, why? And then they're like, it's just not done. And then when I would make suggestions to Paul, I was like, surely, because he used to be on the board of Openmark, surely you should do this here. And he would say something like, that what you're talking about is the moon to this industry. It's not how it's done. It's and I'm like, well, let's do it. Not that hard. Brendan, can we knock something together to show to some advisors to see if this would be the right way to go about that approach, maybe something with compliance? And he's like, yeah, we do it. We showed it to an advisor, and they're like, yeah, that would be a great help, particularly mortgage firms. So there's lots of that. It's a great help, but it's also a bit of a hindrance for me. And that's why Paul is a co-founder, which is fantastic. That I'm trying to find the answer to something that doesn't make sense, and then I lean on the investors to give me guidance there.
Yeah, I mean, it strikes me as a problem that does need to be solved, because the two things, and you sort of touched on this just now, the two things I always hear brokers complaining about are A, not getting enough leads, and B, the paperwork and the admin and the compliance. I never hear them moaning about the fact that they've got to talk to clients, or they've got to help a client find the right mortgage or achieve whatever goals or ambition they've got that mortgage will facilitate. So it's, I guess what you're saying is fintech, if used correctly, could take away a lot of that back office headache that frankly none of the brokers really want to be involved with and don't enjoy, and doesn't help the client process either, because all of that just slows things down for the client, doesn't it?
Yeah, so I suppose this might be a good way to think about it here. So some people be thinking AI, there's venture capital throwing all this money into fintech, and I know our investors never felt stressed about that company. They haven't got it right, the conversion and the help and the holding hands. But I bet you those companies are very efficient back office wise, and I suppose I can imagine some of these companies would have done the same as what I did. So first thing that we did, we didn't build anything, we didn't do anything. We had some drawings on a screen, but what started out was I would have went to a lot of advisors and I was like, okay, talk me through what happens from the very first moment I walk into this office to try and get a mortgage review. And she said, well, we will have spoken together. You won't walk in. Well, what do you mean? It's like somebody's probably referred you, and then you'll phone me, and then I'll scramble down a few notes or phone you back, and then I will send you an email about things, and then we'll arrange a meeting. And I was like, and then they started to explain, well, before I can give you advice, I need to get the illustration done and show you that, and then you documents and that. And then I would ask them, well, what happens then when I walk in? And if I have an email to you, I'll present you the document. which I walk over there to print, and I give you like, we're taking that. I was like, okay, we could automate that. If it's online, we could. When they make the first engagement, we could give that to them up front, and then they could, by accepting it, that would confirm to you the receipt that it's done. And okay, that's a straightforward one, and we could do that for every firm. And we're like, little things. That's not a real challenge, but that's how we were looking at it. It wasn't like, why do you do that? No, okay, you have to do that. Well, let's do that first and automate it. Little things like that, but it's probably very hard to do that if you're a huge firm and you've been in a certain way for 15 years. And anybody who's growing, some of your clients might be really successful and be at 10, 15, 20 advisors and are trying to find more leads for those advisors. But it's not like a firm like that is ready to go out and spend $500,000 building the technology to do something, So we're kind of unique in that we can do that. But as for the pie in the sky and the AI stuff, I'm sure there'll be a place at some point in the future, but it doesn't look like it's anytime soon. And I don't think anytime we speak to borrowers, it doesn't look like anybody wants that when it's such a personal thing that the advisors do.
Yeah, when you talk about AI, you're obviously talking about the kind of artificial intelligence that would replace the broker and would actually find so taking the kind of the robo-advisor concept to the next level, basically.
Yeah, well, there's in America, there's a bunch of these firms having to go not at the advice, but at the interpretation of the documents that you give them. I know I did a call with one of them whose name escapes me now, but they claim, and they've raised money for this, they claim that mostly for the American market, but if you were to show them your bank statements, it's obviously the same in America, its AI software will read them for you and then give you a response to the viability of this client. And there's a little bit of that going on in banking with the aggregation of it. There's a bunch of little things like that, but I don't see anyone getting away with the advice. That doesn't look like it's getting cut anytime soon until there's a personal mortgage based on something, which I don't believe that. I believe that could happen at some point. Who knows how far away it is? Not happening anytime soon. But the admin stuff, the compliance stuff, there has to be tech to hack at that. And I think that's where the fintech will come in,
And I guess this is some people's fear of technology, not just in this industry, but in lots of other industries, but it will replace the people. And I suppose what the message I'm getting from what you're saying is fintech is about keeping the people, keeping the brokers, but making their lives easier, making the clients' lives easier, just making everything more efficient. But it's not going to replace that personal service, which, let's face it, if people don't want the personal service, there's already ways to replace that. You can walk into your bank where you're not going to get particularly personal service, or you can go onto a comparison site. But for those people who can't do that or who want that personal service, I think there's always going to be that requirement, isn't there?
Yeah, I suppose if something, well, particularly first-time buyers, I think everybody who's watching this knows that it's not happening anytime soon for them. It's not too many very sophisticated first-time buyers. The remortgage, there's Mojo Mortgages that have got a really great site. They were just acquired by the companies behind what they call it, money.co.uk. So they have a lot of traffic, and they're in the Financial Times article, the guy talks about the remortgage would probably be the first to go. It's a lot more straightforward process, particularly if there was an internal switch rather than a remortgage. And so they might.
It's like a product transfer.
Yeah, product transfers. Yeah, so that might be the one where a personal service drops a little bit. It's not needed as much, and maybe that would be the first one to go in a few years.
I think even
for a little bit.
I think even with something as simple as a product transfer, though, there's still going to be a lot of people who, because of the amount of money at stake, both in terms of the actual total debt and the monthly payment stuff, even with a product transfer, there's going to be people, I think, who value that reassurance that it's the right thing to do. Because it's one thing, if I suppose you've got your mortgage with Halifax and they write to you and say, well, Mr. Miles, you're coming to the end of your 2-year fix and this is the rate we can offer you. Yeah, some people will just want to accept that, but others will want to have a second opinion of, is this really the best thing, or should I be switching lender, or should I be going from a 3-year rather than a 2-year, or whatever. So when
I think that might be the first one to be challenged, I'm talking about only a couple % of the market. So let's say there's 400,000 remortgages come up, and you've got money.co.uk that's got 7 million visitors per month. Maybe they'll get to the point where they'll take 10,000 of them in 5 years' time. It's not an inconceivable, not a small amount, but in the big picture, for the people listening, it's like, yeah, it's a long way to go before they're going to take anybody's dinner yet, But if something was to go, that might be the first.
Yeah, no, that makes sense, I suppose. Yeah. So we talked there about some of the sort of the things around automating the processes and things like, around the initial disclosure documents and stuff. Is that the kind of thing that, because obviously a lot of people watching this will be sole traders, one person bands, whatever. Is this the kind of thing that is accessible to mortgage brokers like that, do you think? Or is it going to rely on their networks getting on board with this first of all, and then that filtering down to them? And is that where the stumbling block is, do you think?
That's our pitch. That's why everybody should take my telephone number and email address and be in touch with me, towards the end of the year. For the self-employed that are, and the employees that are in firms where they don't, if they're doing well, great, don't leave. If you were thinking further down the line, what could change? The firms and the networks, they should be thinking that way. And I do know from some conversations that I've had, and one big firm that did come to us and suggested that we come under them as an AR for their funding needs and would be a longer play with them. I personally think that a lot of this tech will be there. And that's why we had to sort of change our strategy. I don't think that it's going to be very exclusive. I think if you fast forward, let's go 6 years, I think there will be suppliers that will provide to all the networks and all the firms. I don't know what their business model will be. I think the tech will get commoditized for some of the things that I'm talking about that we can do. I think it's not ideal for us, but it's inevitable. That's what happens, and more people will get to use that. And but what should happen then is the efficiency goes up of advisors. So then those that would love to have been able to do 30 mortgages in a month that are currently doing 15, if they've got a good source of lead generation and they're building their network out, they'll get to 30. So if they're doing 30 and they were doing 15, that means there's 15 mortgages to go to other people. Maybe it's somebody locally up the street that was dependent on on the high street branch or retail. And I'd be very surprised. I'd be very surprised if there's not, fast forward 10 years and there's a third less mortgage advisors in the industry. So I think and that should probably provide anxiety if I was right there for a lot of advisors, especially when you take the likes of Money buying Mojo mortgages. So 7 million people traffic. If there's in any way of some straight through starting to happen, and if the efficiency processes are in there, which I'm sure they are for a firm like Mojo and Money.co.uk, they are going to increase their market share. And so there's going to be less advisors. And then as more of the Gen Z move online, well, Gen Z is online, but as Gen Z start to decide or suddenly be able to afford a mortgage, so I for them yet, but once they're available to afford a mortgage, they'll just be so expected to be able to do this online. And that is those that haven't got the deep client bank for the referrals. That's where there's a bit of struggle. So that's where I think the challenges will lie in the future. There's been a lot of recruitment in the last 6 months in the last year from the big firms, but I don't think there's going to be sustainability. There only is 1 million to 1.5 million mortgages a year, especially in a really good year. Let's fast forward 5 years, interest rate rise. Maybe there's 700,000. There won't be the same amount of brokers to get around because the good brokers will look at more efficient, So that's, if I'm right about that, that's probably a little bit concerning for some people. It could be wrong, but I definitely think there's going to be more and more players entering the field online. And if you take a little bit of market, it has to come from somewhere else.
Yeah, well, but it's concerning depending on which side of that you end up on as a broker, whether you are one of the ones who becomes more efficient and does twice as many mortgages, or whether you're one of the ones who therefore doesn't have as many clients because they've gone to those more efficient brokers.
And there's one other point out that, and it's something you mentioned that we might talk about here was, I don't know if everybody reads what's happening in the industry to the extent that I do, is that you'll notice that private equity started to enter the space, and some of the big firms, Primus, I mentioned one where they got a 200 million war chest to acquire other firms. There's 2 other ones off the top of my mind that are like that. And what you will also see improving the efficiency is if they are consolidating and buying the 1, 2, 3, 4, 5 man bands and bringing them together, and they do provide such sort of processes that increase the efficiency, those people under their umbrella should become more efficient, and so they should take more market share as well. So it's exciting for the likes of us. We're raising investment and starting to grow. But it's probably very good for a lot of people that are thinking about their exit down the line if they've got their processes in place. But for somebody who's maybe just entered the industry and are trying to, they want to get busy with their lead generation and conversion and efficiencies and support teams and all that sort of stuff.
Yeah, and you touched on exit stuff there, which I'd like to come back to actually in a minute, because I think that's something that a lot of brokers perhaps don't give enough thought. A lot of business owners don't give enough thought to. But just in terms of Mortgage Propeller itself, if I understood correctly, then your goal at the moment is to be a brokerage that uses fintech and is more efficient. But did I take it from something you said earlier on, that ultimately you plan to be bigger than that or become like a network, or is that the ultimate goal?
Yeah, I think so. I don't like to call it network. This is probably where I'm a bit stupid in that I don't know how you define a network. But the people that help us with our fundraising and speak to, they say, look, we're just a different type of mortgage firm, and we use the technology to drive efficiencies and drive leads into the broker's hands so that they can do more advice. That's basically it. The things about structure, self-employed, employee, brokers. Truth is, I'm not very clear on what's the best way to do a lot of that. I know there's little. I know I'm looking at one firm. It's got a club, a network. It's got a club. It's a network. It has ARs. It's employees, and I'm like, okay, well, let's just do the things that we can control first, and we'll figure that out all later. I'll bow to my investors about how certain things should be done within the industry. So, but what I would say is that when I'm trying, I'm asking the silly questions. I'm like, why is let's just pick one. Let's pick Primus. How come I have never heard of Primus and I've been, doing mortgages for so long? How come that brand is not everywhere in social media and everywhere on advertising and digital marketing, affiliate marketing, performance marketing if you're American? How come? Why is it not everywhere? Why is it not got a personality and a brand? Do we not learn enough through the? And when I would ask people, like, that's not how it works. And I'm like, okay. So what I look back is that
not a real answer though, is it? That's just not how it works. That goes back to what we said about the new boy challenging the the industry, doesn't it? And not getting
and I don't understand that. So, because I came from Betfair online. And so I would look at all the competitor market. We used to look at share of wallet, share of voice, and all these things where the brand awareness, and the banks do it. Don't get me wrong. We all know what Barclays Bank is, and we all know these other people, HSBC. We don't know housing mortgage. That's such a huge space. And then you dig a little bit deeper. And I was pitching to a wealth firm that does mortgages on the side, and they're with a big network, and they have about 500 million under management. And I was asking questions like this. So I assume that you're able to search through all your mortgage clients, find out the ones that had, say, less than 80% loan to value, the children are now over 18, and they had a mortgage with a £100,000 deposit or something like that. So that you can see who you should talk to about wealth, and they just look at me and go, no. And that is the most basic thing in any other industry and any other online business for cross-selling.
Yeah, I mean, I wouldn't even class that as anything as glamorous as fintech. That's just basic, have a CRM, have a customer relationship management system that can tell you that kind of stuff.
So when I was starting to learn this here, and then I'm talking to the board, I'm like, look, it seems to me that these firms that, so 75% of all 75% of all firms are AR of a bigger outfit. It seems to me like these networks, these bigger outfits are the problem, because they've been around for like 15 years, so they weren't built with front facing, and they've got their legacy software that they can't change. And because they have so much admin staff and such a pain in the ass for all the advisors to get sign off on a social media or on board or do paperwork or whatever else, they have incurred such heavy costs, which they pass on to the advisor. This is me looking at it from the outside and it's going, so if you were more efficient, you could be more competitive than these big firms. And since none of these big firms have, provide leads, I was going to say, that should be a default, I would have thought, provide leads to the brokers, then I kind of feel that they're the problem that need to be challenged. But they're massive. It's pretty scary to go, oh yeah, we're going to try and challenge one of those guys, but maybe we can eat into a little bit, by doing something completely different. But I guess if Google decided to go and be a mortgage network, it would eat all these people for breakfast in my opinion. Nobody will be able to cope with their innovation, their speed, and their technology to do this. So we're not quite anything like that, but we're trying to do it a little bit step at a time on a tiny budget, and then learn from the advisors. So right now the focus is on just making the next sort of little improvement, but you could see how it could go that way if the backing's there and the support's there, and we're making the steps to go that way. It'll take a little while, but that's what we're thinking.
Yeah, but ultimately, whether it's a network or whatever structure it is, the idea is that ultimately you'll develop this model. It'll be highly efficient, highly automated, making best use of technology, and you will then, one way or another, have that as a kind of umbrella that other brokers can work.
Yeah, we did it with a pilot, the mortgage pilot for 6 months. So we had about 35 advisors from 17 firms come on, and we built it. So we didn't make anything out of it or profit out of it. We just give it to them, and we said, look, go in there. We will provide you with leads. Just give us feedback about what's good, what's bad, and that's how you validate your proposition without spending a whole bunch of money. So we did it with a pilot. We know it works.
This was, if I remember from a previous conversation we had, this was with actually the client or the prospect going onto the website and essentially doing quite a lot of the fact find, or they've even.
Yeah, that's exactly what it was. Yeah, so the advisor could use it for his own clients if he wanted to. If he wanted to do the fact find for him, he could. But what happened was, people would find us, be it through social media posts, through ads or whatever, and they would make a start. And when they made so much of a progress through their fact find, we allowed them then to choose the broker that they were going to use. Now, we only did it by region. You could have done it by language or whatever else they wanted. We just choose regions. We just did Scotland, Wales, Northern Ireland, England. And then that allowed the advisor then to take over with a qualified lead, someone who genuinely wanted the mortgage. Now, they may not have been able to get one. Maybe they were 6 months or a year too early or 2 months early, but it worked, and we did that and we proved it, and that's what we go out to the market to look for investment now to go, look, you know what, initially we thought this is a technology play, but now from what I'm saying to you about the bigger firms having all the dominance of using legacy, like we can go out and challenge that and do that, and we should be able to provide a better service to these advisors, which would allow us to have a retention and generate revenue. So that's what we're going to do. But we've proved that it did work. It was pretty exciting to see people come into us and we're going, hold off, we can't spend so much more money to try and provide 40 advisors with leads in the next 3 weeks. Let's throttle them to the following month and to the following month, because you only need to do it for about 6 months and you've proved it. It has to be over a continuous period of time. But it was very interesting to see, because it opened up a whole bunch of other things. Because of the way the technology was, you can see the response times of brokers to the clients who are in the fact find. You also see the time that people began seeking to know about mortgages at night. So our registrations. Yeah, there was no point having the platform. We had the platform 24/7, but between the hours of 2 p.m. and 5 p.m., there's absolutely nobody coming onto the platform, nobody looking at it. First thing in the morning, lunchtime, and evening times, particularly at the weekend as well, particularly late at night at the weekend. These little things all add a little story to go, okay, if you were running your ads, you should run at that time. If you were going to be active as a broker, your best times would be here so that you can catch them when they come on. Little things like that all sort of build a picture,
Yeah, and because the more that kind of stuff, when you've got enough data, you can really start to see the trends and the patterns. I mean, I know, when I've been working on Google Ads accounts with larger brokers that have got a lot of data going, you do start to see exactly those kind of trends and it's not even necessary that people, for example, you might say people don't click on the ads between certain times. Well, they're still clicking, but they're not going to make an inquiry at that point because of, maybe they're on their mobile phone on the bus or something or whatever. There's all these variables in it in terms of times of day, location, device type, all those things. And the more data you've got, and obviously the benefit of being becoming a bigger organization and doing that on behalf of lots of brokers, you get that data and you can actually make meaningful decisions on it.
Yeah, here's a very good example. People that are Fintech, which we know is just a term, but this is a perfect example we're thinking. So we made a change every week. We have new release every single week for 6 months. So there's a new platform every 6 weeks. Something changes. We made a change one time, but nobody came to the site. Oh my God, panic stations in the office are like, what are we doing here? Why is there nobody coming on? We ran this technology that shows where their fingers were, because it was all, where they went on the page. And
Yeah, heat mapping.
Heat mapping, yeah, sorry. And geez, I remember the panic stations going, "This is it. We've raised all this money and it's not working. What did we do wrong?" We changed the button. So when we were looking at the desktop, like I'm talking to you now, I can see all the menu. But when I was on a mobile, there was what's known as a burger menu in the top right-hand corner to bring. And that's where they had to go. We had changed that, but we couldn't tell, and nobody could find the button to register, and it just stopped. They're like, okay, look at that. So little things like that made it a point. So you're talking about the device, 80% of the people who went onto our platform completed fact finds. They started with mobile phone.
Yeah, which they will do if you make it easy enough to do, and if you even little things. And I see so many sites that don't do this. You can, when you're creating an online form, you can set it so that a particular field, if it's only to accept numbers, that the keyboard on the phone will change to a number-only keypad, which obviously makes it much easier to type in, like you put a credit card number in or a phone number. So many forms don't do that. So you type in a credit card number or bank account number, on the tiny number row, whereas they could have coded the form differently. I was looking at a broker's site earlier this week, I think it was, and I was critiquing it and found an equity release calculator on there. And one of the questions was, how old are you? And you couldn't type the number in there directly. And it has an up and down arrows. You have to click plus and minus. Fine, except it started at age 1. And I was like, how many of your potential equity release clients are going to be aged, 1 to 18 or, anything under 50, basically. So it's
and those things. So this is how I'd be looking at that. Okay, so you make a change on something like that, you can see your conversion rate goes up from, we had a lot of data. We had like 55 million pound of applications went to brokers in that 6 months of the pilot, but we lost, God knows how much. There was nearly 200 million that never got to a broker, so that they never completed. They just bounced either they were kicking the tires or they just got annoyed with the platform or whatever, and those things. And we're quite small of a team, and hopefully we'll grow now. But those little things make such a difference, because it works out that the way it would work in e-commerce. And this is what I would have done in Betfair. Is like we change something on the site, and maybe there's a 2% increase in the conversion rate. Well, what the job is to figure out what that is worth annually, and this can be an awful lot of money. Because, and it's one of the questions that a private equity firm asked me there, what's the lifetime value of a client? And nobody seems to have the exact answer, but if we took if the 2% conversion rate for 500 registrations comes in, and you're talking there's 10, and of those 10, half get a mortgage. So you've got 5 mortgages, revenue total might be something around £2,000. You're talking £10,000. But then you look at the referrals that they may provide if your service is good, and then the remortgage and stuff. And that's what the private equity guy was stumping me on. And so that little button starting at 1, if it increased your conversion by starting at, 18 or 20 or whatever it should be, makes such a difference. And that's the battle that we're having. We're having that battle, trying to think 5, 6 years ahead for investment and what we could get to. Whereas a small advisor in a firm that's not getting that support, or when I say a firm, a network or somebody that's just not in the same playing field that we're trying to win our battles on. We're very different to a lot of the other ones, but we have to get them right, because we have to get those numbers up.
Yeah, no, definitely. Time's rattling past. I want to come back to that thing that I said just now about exit strategies, because my audience is made up of quite a lot of people, mortgage brokers who are very new to the industry, but equally I know there's a good swathe of my audience who are been brokers maybe sort of 10, 20 years. They're maybe sort of early 50s now. They're thinking about how they exit in the business, how they retire, in view of all this stuff that's coming along, and what you said there as well about perhaps firms getting taken over and bought out. Is there any particular advice you would give to brokers, what they should be doing now if they want to be securing a good exit in 10 years down the line or whatever?
So it's not like I'm qualified to talk. It's not like we've been buying firms or anything, and that's not on our horizon. Though it's a potential one that you would put at the bottom of your pitch deck. But what I have been doing has been speaking to the people that are raising debt funding with the intention of acquiring, and there is some very clear things that advisors need to have. One of them is, well, first of all, you need to have processes in place. So if your CRM is writing something down on a calendar 6 months ahead, I don't know if that's still happening. I can't imagine it is.
Probably.
Well, if it is, you're not worth an awful lot. There's a great book called Built to Sell. It's very easy reading, and I would recommend any brokers that want to think to read that. But it talks about putting processes in place so that you can. It's about your future predictable recurring revenue. That's what online is all about. And if you know how much traffic you have and how much conversions come in and what the value of it is and your cost of acquisition, that's our world. But the private equity has been doing this in wealth for quite a while. And it seems like, if speaking to our investors and other private equity, it seems like they've woken up to the mortgage advisors. So when they do wealth, there's a recurring revenue. If you've got 100 million under management, you know the future recurring revenue. So that's how a company's valued. It goes, okay, it's worth 5 times its future annual recurring revenue, or whatever it is. So mortgage brokers have to be able to do the same. And so you should be able to know how many referrals came per client. So if you turn out that you have an average of 2.2 referrals per client, because you've got this documented in a CRM or an Excel or something clever, then you sort of know how many clients you have, how many referrals you'll get. And then if you could pick an estimation of how many switches or remortgages or future businesses come in, and that needs to be documented. They're not going to take your word for it. If you've got I don't know, let's say if you have 10-year trade history, this should be a much easier task. If it's the case that you're, still driving leads, but you could show sort of an acceleration of how you're driving leads. Perhaps you're very influential in the industry. Perhaps you've created a social media brand which drives a certain amount of traffic to your site. If it's not to your site, you're going to have some way of capturing it. Your P&L will take care of it, but you have to have a document. So I suppose if you're the one-man band, and I don't know enough about this, but I see some fantastic people on LinkedIn that are really building their brands, and from that they're getting referrals. They'll need to document that. Because here's the thing, it's not like if Primus is going to buy this person's brand, it can't. If he wanted to exit, he can't. Do you know what I'm saying? It's not worth anything. So his clients will have to be transferred into the future company. So they need to think a little bit more about processes. It's not about, okay, when I go and drop one of my amazing videos and I have 100,000 people watching it and I generate leads, so that's fine. So you're the brand. Are you going to do that for the rest of your days? These are the little changes that are different from the wealth industry about recurring revenue and money under management versus the mortgage broker industry, which is why
it relies on the client coming back every 2 or 3 years, doesn't it? Whereas with wealth management, it more relies on them not leaving.
Yeah. And so those things, if you think about it, let's say somebody let's just say they did a run of Google ads. They did a run of Google ads every 6 months and dropped 5-10 grand to get their leads in. Well, that's not going to be enough just to because the firm that's going to acquire them could use that as their lead generation. But if they did the run of Google ads and then they documented the recurring revenue that came from that and the cross sell, which is a particular one, and their success rates, and if those numbers are all going up and to the right, they'll get a higher multiple for their business and they'll be more attractive to acquire, as opposed to the person who's got the calendar on paper, nothing to show, only got their P&L, and when you ask them where they get their leads, they have nothing clear and concise. And I think that's going to be a challenge. There's some fantastic articles being written about that in the Financial Times by people when you start Google, because I have to present this to my investors, you see, once a month, and what's happening and what's going on. And so I just gather and collate them, and then I show them what's going. But I think that's something, anybody who's thinking about an exit in say 3, 4, 5 years, now is the time to do that sort of stuff. Anybody who's thinking about it in a year, I hope you've already got that in place, but it's a very exciting time. It's a very exciting time for us because we're trying to raise money. We're trying to raise money when there's nearly $1 billion of private equity and debt capital coming in to acquire. It shows that we're in the right space at the right time. So I think everybody who's listening or watching should be really excited about the opportunities for an exit if that's what they wanted, or possibly being sort of like a JV where they'll bring them in under somebody else's brand, give them capital with a view to an exit in a much longer time frame. I don't know enough and I haven't been in the game long enough, but I don't think that's the way it was just seemed to have landed in the last couple of years. Because when I was doing my searches in 2018, I wasn't seeing this sort of stuff. Now I have to update twice in a month to the investors because Trussell's been acquired, Mojo's been acquired, Primus has got a war chest, somebody else has got a war chest. It's happening everywhere now, so it's really exciting.
Yeah, no, definitely. It's as with all these new things, it's exciting if you get on board with it and frightening if you don't. So
yeah, well, we don't have any of these luxuries at the moment. Still, squeaky bum time for us as we are trying to get the first advisors on, get those processes in place. We've got the tech, and we have to do all that, fight with all that administrative stuff that everybody in the industry has had to deal with for a long time. And then once we have it in, see how we can make it more efficient,
Yeah, well, it sounds excellent. We're getting good luck with it all, and do keep in touch with us via the Facebook group and stuff, and let us know how it all goes. If just before we finish, if people want to contact you, ask questions about this, talk to you about opportunities and stuff, where can they find you?
Matt@mortgagerepeller.com is probably the best way. If you're on LinkedIn, follow us because we'll start talking a little bit more about what we would be offering advisors down the line. And just that's probably the best way. Matt@mortgagerepeller.com, or connect me on LinkedIn.
Yeah, we'll put the links in the notes to the video and everything as well. So
yeah, and also, you know what, another else, David, is I like, we've been talking for an hour here. I really am only learning this industry, and if anybody has mad, crazy thoughts or want to shoot the breeze about nothing in particular, or to tell me, Matt, you're on the wrong track here, I would love to hear. It's the only way I'm going to learn. So I really like to listen to it and hear what people have to say. It's the only way. It's the only way we're going to get to the next stage by learning from what people have to say. It's like talking to your customers. You have to do it.
Yeah, no, definitely. Well, yeah. So there are open invitation, everyone. If you think Matt's been talking rubbish, then contact him or put something in the comments or whatever. Yeah, fantastic. Thank you very much for coming on today, Matt. It's been great chatting to you as always. Hope everyone's got some useful stuff from it. If you're watching on the replay, put comments or questions in or whatever. If there's anything you think we didn't cover, and one of us will definitely get back to you. And thank you very much. Thanks again, Matt.
Cheers, David. Good talking to you. See you.
Cheers, everyone. Bye.